as we hear about the potential for fresh regulation in the UK around cryptocurrencies, can you just give us a sense of how you're thinking about this? Why now? Is it the right time to be regulating crypto?
Well, thanks for having me, first of all. I'd say in terms of the right timing, in some ways it's long overdue. One of the things that we've seen in the crypto industry over the last several years is a lag in government understanding of exactly what cryptocurrencies are, what stable coins are, what a central bank digital currency might look like, these various different attributes that we in the industry get so excited about in decentralized finance and all the opportunities that it could create for us and create for the broader economy. Governments have been looking at it with some level of skepticism. And in some cases don't fully understand what they're looking at or what they're trying to accomplish. President Biden's executive order you referenced in that lead up there was an important first step, and the Bank of England activity that we're expecting in the next couple of weeks, we also think is going to be a first step, but it certainly isn't the end of it. In many cases, this is a lot of research and a lot of reports that are due out in the next several months. I can say that as an industry participant, the sooner that government gets on the ball and begins to actively engage with us in the private sector to make sure that the future of finance looks the way they want it, we want it, the better it's going to be for all of us.
Charley, to what extent do you think geopolitics has come into the mix here? Because we've been covering a lot of stories how crypto has been a lifeline for Ukrainians trying to get access to fund flows, but also concerns about who's using this as a potential escape from sanctions out of Russia. Do you think this is part of the mix as to why some regulators are now increasing their focus on the sector?
I think it may be around the margins, to be honest, but I've spent enough time in government myself to tell you that governments don't usually operate that quickly. And while the sanctions were put in place very rapidly over the last several weeks and months, the idea of a wholesale investigation about what the future of crypto is, what the future of central bank digital currencies and stable coins are, that's something that's been in the pipeline for many, many years. And it's come into stark relief, I think, over the last couple of months or last couple of weeks. And understandably, you talk about what's happening in Ukraine and in Russia in terms of the opportunities that crypto has, either to provide relief to people in Ukraine who are suffering because of the Russian invasion, or alternatively, the ability of Russian oligarchs or entities to circumvent sanctions. The fact is that type of activity is very, very limited. And as excited as we get about crypto, the reality is it's still a very small fraction of overall global economic activity. And it's not yet robust enough to allow a country like Russia or its actors or participants within its ecosystem to operate outside the bounds of mainstream finance in a healthy way. So I think it's important that governments are paying attention to it, but I would caution viewers to think that this quick action by governments is not going to have a material impact on what's going on right now in Russia or Ukraine.
Charley, at the start of both of your answers there, you mentioned the word stable with the preface stable coin as well. Hasn't your industry, hasn't it been very, very guilty of saying to the vast amount of people who want to get into crypto, it's okay, it's about going up all the time, you're going to make loads of money by buying crypto and it goes up. But isn't the measure of real success, which actually is the truth, if you get the stability you crave, it will be the fact that the price calms down, that it is useful as a currency for buyers and sellers over a longer term. And the fact is, a success of cryptos, whether they be Bitcoin, stablecoin, whatever they will be measured in a calm price movement rather than accelerated price movement. Hasn't your industry been just stunningly guilty of mis-selling what success looks like?
I'd 100% agree with you that certain parts of our industry are that. I would argue that our company isn't, because we don't actually issue cryptocurrency at R3. Now, the fact is there's a difference that I think is important for viewers to understand between crypto, as we've come to understand it, and all the excitement and the buzz around it, around Bitcoin and Ether and Dogecoin and all these new virtual currencies that come almost out of nowhere that people don't really understand or can get a grasp of how they function. When I talk about stable coins, that's a set of asset class which is actually pegged to specific fiat currencies issued by nation states. So the British pound, the euro, the US dollar, yen, et cetera. And the goal of many of those instruments is to do exactly what you say, which is to mimic the far more stable price movements of the underlying currency rather than these incredibly volatile cryptocurrencies. And the thing is, for crypto investors, especially moms and pops and smaller institutions that don't have experience in investing in such volatile instruments, they're getting hurt by that lack of stability. And one of the things that I think the Bank of England, the FCA, and other government actors needs to look at is the extent to which this type of activity needs to be regulated for consumer protection purposes, and where stablecoins fit in that. Again, those pegged towards a fiat currency might be better for long-term economic activity and stability in the system.